Hello, traders. It is Thursday, June 20th. I hope all of you got the memo that we were going to be doing a live event today. We had a holiday yesterday, so a day that kind of bisected all of our trading. Say hi to Harry. Harry, how's it going today?
Spectacular, Pete. How are you?
Things are good. Things are very good. So let's take a look at our last couple of picks. A week ago, JPM, hard to imagine that a week ago, we were waiting for the FOMC statement. And down in here, I'd seen this little pullback on JPM. It's below AVWAP-E. I felt that if the reaction to the FOMC statement was big either way, that we had a chance to see the bank stocks move big either way. And so I did a JPM straddle just before the FOMC statement, and it turned out to be a great big nothing burger as far as the reaction to the statement. So I was able to exit the position about 10 to 15 minutes after the initial statement was released for a scratch. And I figured if we haven't seen them move now, I'm not going to wait for the press release. So exited that, took a scratch, no harm, no foul, was looking for a decent sized move, didn't get it. And then last weekend, I highlighted BABA as a short, but only if we get a nice long red candle on the SPYD1 chart. A gap reversal off of an all-time high could still happen today, but we'll see. And then finally, my pick from the live event that I did Tuesday with Rajul was on net, and I wanted to see it close above the 200-day and the 50-day moving average. It fill in more of this earnings gap, and so far today, it's been able to keep above the 200-day and the 50-day, but still no big rally in the underlying stock. So we're still kind of waiting for that trade to set up as well. Harry, what was your pick?
Microsoft and call debit spread. You would have been in profit if you took that. You would have been in profit the same day, the next day, any of those days. Microsoft backing off a little bit now, had a nice gap up on Monday. I still like Microsoft overall as a stock. I'm not sure I would trade it long today, obviously. I think the market's going to drop and Microsoft's weak. But overall, I think, that would have been a profitable pick for anyone who took it, followed that pick. It worked out fine. I'd like to point out that tomorrow is going to be the option expiry tomorrow represents the largest in market history. So $5 trillion of liquidity is expiring tomorrow at the expiration date. In the past, dates like that have, let me just bring up the last date here, which was December 2023, where $4.9 trillion was up in the air. On each of those times, the market has reacted violently, and the market has typically reacted bearishly. So I'm not sure it passes prelude here in this case, but it is important to know that you have a volatile event occurring tomorrow with the largest ever market expiry occurring in market history.
Very good information. So I kind of let me go back to the date that you had just mentioned, and we'll go back and take a look at December 2023, which would probably have been about the 21st of December, and you can see that long red candle right there. I believe that would put us into the third Friday of the month. And yeah, that's a pretty big decline there. Yes. And overall, to me, this is like a buying climax in here. You can see that most of that's happened on light volume. Yes, we are picking up some volume right now, but much of that is related to triple witching, end of quarter. A lot of institutions are active. They're rolling their positions from June to September. So that's what triple witching is all about. If you looked at every triple witch, all you have to do is look at the AVWAP-Q line, and you'll see that the volume is heavy heading into that triple witching. So right in here, even if the market isn't moving much, you're going to pick up a lot of volume. So don't misinterpret that. It's not bullish. It's not bearish. It's institutions actively rolling and adjusting their positions.
Yeah, I mean, you got to remember, retail traders can tend to trade options and futures contracts and so on. And what you're trading is the price movement on the contract, right? So you're not actually thinking of it as a contract. If you get a, a 300 call on something, you're not thinking, all right, well, that's the price that I'll be able to, you're not thinking about exercising the option. You're generally not thinking about holding it to expiration. You're thinking, I got this thing for $4, it's going to go to $5, and then I'm going to sell it, right? However, that's a retail mindset on the options. Now, a lot of institutions are buying options for the actual exercising of them, and they are holding those options to expiration. And so when that happens and they expire, you have a tremendous amount of transference going on the market maker's part, going from these options to the actual underlying that it represents. And right now, when that represents $5 trillion of underlying representation, that's an incredible amount of movement and shifting that's going to go on. And the institutions are well aware of it. And by the way, this is one of the institutional advantages, because they know, they know their chunk of it, and they have a good idea of what's going to happen when all those come to fruition. So they can, in this case here, be a pretty good predictor of market direction. And how do you know what institutions are thinking, since you can't be inside those meetings and you're not there when they're all sitting there in their morning brief and, okay, the market's going to do this because we know all of our positions are coming to maturation? Well, you look at the price action. You look at the price action here, and you could see how are institutions going to prepare for tomorrow. And the best way to look at that is look over at SPY. Right now, SPY is flat, but it has backed off considerably and is now well below VWAP off of the high of the day. Is that prepping us for a fall before we go into tomorrow's big event? Maybe it is. We'll have to watch and see. But I am erring on the side of being bearish at the moment, at least short-term bearish for today and tomorrow.
Yes, and I am at best neutral. I am looking for, you don't short market tops, you go to cash. Okay, great way to lose a ton of money is to try and pick a market top and to start shorting like crazy. Yes, this feels toppy to me, so I'm going to wait for technical confirmation. If I get it, then I'll have no problem shorting stocks. On a day trading basis, you can do anything you want, period. You're short term, it's intraday, so you have lots of flexibility. So could I be shorting in here? Could I have been shorting into this big rally that we had on Monday? Sure, if I had the right stock, absolutely. And there were a couple of stocks in there that you could have shorted. AFRM was one, and that was actually a bearish call spread that I highlighted a couple of weeks ago. Stuck with the position, shorted the stock on the way down. Those two trades were completely independent of each other, just trading price action. But yeah, absolutely. And I've seen a lot of good shorts right now where you tend to get more consistency on the short side. Once that selling pressure shows up and it surfaces, you get these nice stacked, consistent red candles, and the stock doesn't have a lot of fits and starts. But you do see that on the long side as the market is trying to move higher. If you're long a stock, it gets a little frustrating because it takes 3 steps forward and then 2 steps backwards and then 3 steps forward and 2 steps backwards. Those retracements are a sign that the stock is really challenged to move forward because there's constant selling pressure.
I am actually right now, because I got Will's email, I'm installing OptionsLocker Beta and excited to see what your new buy-sell signals are going to show me.
They're really good. And I can, well, actually, here's a buy signal right here on SPY. Yeah, that was a pretty good buy signal. But the way I like using them is, and let me make sure, because we've got a couple different types of trade signals up. The trade signal that I have currently selected is our older trade signal. That one tends to be more resilient. It waits for confirmation, but then once it's in a position, you can see this thing has stuck like glue to this position. I can zoom out and you can see some of the other signals that have also come up. But I'm going to add, let me zoom out here, and I'm going to take that trade signal off, and we'll put up a 10p trade signal. And so here you can also see, now this one is more sensitive. It gets in and out when you have a very choppy market like this. Gorgeous buy signal. And the way that I like to use this is that when the 15-minute is on a signal, then you follow the 15-minute signal. So right here it's on a buy, so you would be buy only on a 5-minute basis. And so you would be catching that move, you would exit here, you would get in here, you would exit here, you would enter here, you would exit here. Always consistent with the 15-minute time frame. And so it's a really, I think you're going to find these signals to be very, very accurate. So I'm excited about it. I think all of you are going to have an additional level of confirmation when you're looking to enter a trade.
Yeah, I think it's going to be a great addition here. I look forward to digging into them. I just downloaded it now, so I am.
What's JPM's take on the market here? What kind of insights do they have?
They're bearish at the moment. They are seeing they're seeing a lot of profit taking, although they're not seeing hedge funds get active at the moment in terms of actively shorting anything, but they are seeing profit taking. Usually, a lot of their actions right now remind me of previous times when we were at a market top, and then you get that kind of technical pullback. The interesting thing is that you would think institutions, they pay attention to macro technicals. They're mainly fundamental. They're huge fundamental traders, and that their fundamental trades show up as technicals to us. What I do see here is that a lot of buying into NVIDIA has stopped. A lot of the general energy, all of that. There just seems to be, even though there's higher than average, a little slightly higher than average volume today, it's a slight contradiction because their desks are fairly dead at the moment. So it seems to me they're kind of prepping. I wouldn't say they're going into a market bunker at the moment, but they are clearly, they probably reminded me about 10 times this morning that $5 trillion of option expiry is coming up tomorrow. It's foremost on their mind. It is, there's nothing more on their mind right now than all of that than triple witching. That's all they're focused on. And I do think they're bearish.
And from a market standpoint, there was a tell early this morning. So we had a day off yesterday, and I'm going to put up the extended hours. And so here's what happened: extended hours. The gray area is the after hours trading for SPY. And so you can see how that session was gradually grinding higher, and then you got this big pop. But about 2 hours before the market opened, you can see this heavy, steady selling pressure. So most of this gap was filled. When we do have a gap, we want to see half of it or more preserved when we retrace, and this definitely retraced more than half of it. And so this was a sign that this little pop, this rally, was going to be in trouble on the open. And as I zoom in, you can see that the market had a long red candle and then a couple of green candles, didn't get even close to that overnight high. Whap, 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 whap. Now we have a lower high double top, And I'm going to take the extended hours off, and we go into a daily chart. Remember that the pattern that we're kind of looking for is this right here, this bearish engulfing candle, the gap up to a new relative high with selling pressure the rest of the day. I don't think we're going to see that today, but I also think that we're going to continue to drift lower. So I'm not looking for this market to get smacked down hard, because it would have already happened. You would have seen long red candles continuously moving lower, but this has been kind of a choppy drift lower, which is typical of what a triple witch looks like.
I just asked them directly to just cut the shit in the top, making me read their damn tea leaves and tell me straight out if they're bearish. So
yeah, we've got, economic numbers are starting to deteriorate a little bit. We've seen we've seen initial jobless claims coming in a little bit higher for 2 weeks in a row. That could impact the jobs report that's going to be coming out after the 4th of July. And mind you, that jobs are the one thing that bulls have been hanging their hat on for a long time, because it's been so strong. And we had retail sales were a little bit soft. We're going to get flash PMIs tomorrow. So it's important to keep an eye on what's happening economically.
yes, I've stopped trying to read the mercurial nature of investors, where it's, bad economic news is actually good news because now we're going to get rate cuts. No, wait, bad economic news is actually bad news because it's too bad. It's accelerating too fast down, and rates are still high. And it almost depends on the day, where, you could see, huge bump in unemployment, and the market jumps up because, oh, great, now they'll finally cut rates. Or you see the market drop because, oh no, we're heading into a recession. Things used to be so much clearer. But I mean, look, at the end of the day, I think you go back to, obviously we're day traders, right? So you're looking to see and swing traders, you're looking to see what the kind of quick, immediate moves are. But really, at the end of the day, it comes down to these companies. It comes down to their earnings. It comes down to value over value. And good economic news is good economic news, period, right? And the better the economic news, the better these companies do on earnings. And we saw that. The reason the market is at an all-time high right now is because for the last year and a half, we've had nothing but good economic news. And what that translated to was great earnings for these companies, and stock skyrocketed, right? Now, that's sort of a macro thing. As short-term traders, you're looking at the immediate price action, but you just have to consider in the long term, good economic news is good economic news. It just is. It really don't need to be an economist to think of that way.
Right. Yes. And it will get to a point to where our economic conditions start to deteriorate. That might seem like what everybody wants. Certainly the crowd that's looking for a Fed rate cut, they want economic conditions to soften, because then inflation will really start to drop. But be careful what you wish for, because that will quickly change from, oh, goody, goody, the Fed's going to cut rates, to, I think the Fed waited too long. We could be going into a recession. They're going to be playing catch up. And you get that kind of mentality shift, and it happens very quickly. So the initial first rate cut or two, everybody's going to be all giddy and happy. But then after that, then they start getting worried.
Yeah. I asked JPM, and I even asked Goldman, why is everyone raising their S&P target by the end of the year? In the beginning of the year, you guys were, putting the targets at 480, 500, things like that. Now you're up at 600. Why? And they basically kind of just said what we were just saying here, which is 6 of one, half a dozen of the other. The economy has good results, in which case earnings are going to be good, stocks are going to go up, S&P is going to go up. Economy is going to take a bit of a dip here, in which case they're going to hit rate cuts and probably do it in the fall. And when that happens, you're going to get a boost to the market because of the rate cuts. Either way, you're going up. That's the way they see it. And the only flaw to that plan is, what if bad economic news is really bad, right? There's that sweet spot. You don't want it to, you want it to drop enough to get the Fed to go, okay, we can't keep rates this high. We can't risk a recession. We're doing our job. Inflation's coming down. Boom. Here's your rate cut. And the moment you get a rate cut, this market's going to take off like a rocket. but you don't want it to drop too much, because if it drops too much, then they start saying, oh, the Fed's kept rates too high. Now it's too late. The train's left the station. Recession, here it comes. And so that is the only kind of scenario that blocks their bullish predictions for the end of the year, which is if the economy is, all of a sudden really starts accelerating on declines. We haven't really seen that yet, but doesn't mean we won't.
Yeah, and I agree with that as well. The Fed is in like position A. They are not in a place where they have to cut rates because everything is stable, everything's good, economic growth is solid, inflation's starting to come in. I mean, they are in the perfect position. And they just said during the last FOMC statement, hey, if we start to see signs of economic deterioration, we don't have any problem cutting rates. We just don't see that right now. And with the market at an all-time high, they're certainly not in a hurry to do it. And so this is actually a very important point to make, because neither Harry or I are bearish, okay? When we say bearish, we're talking very short term.
Yeah.
But ultimately, we're not taking our eye off the ball. And the ball is we want to buy a dip. We want to buy a dip. So that's the first and foremost thing you have to have in your mind as a trader is we want to be patient. We want to wait for a dip. We want to buy it.
And it kind of brings me almost to my pick of the day, but it might be my pick of the year right here if you're looking to grab something and hold it. But certainly it's also good short term. I'd wait to see if you're going to get a dip tomorrow. Caveat, any pick I make on a bullish side, wait to see what the response is tomorrow on the market. But it has been pointed out to me, and it's really interesting to look. If you take a look at Amazon, and you go back to 2021 even, right? And what caught my eye was someone basically saying that, if you invested $10,000 in Amazon back 4 years ago, you know how much that would be worth today? And of course, you're expecting someone to say 50,000 or 70,000 or whatever it might be. And the answer is $10,000. $10,000. You wouldn't have made a dime, because Amazon literally in 4 years hasn't moved. It dipped, obviously, came back up. It's on an upswing now, but Amazon hasn't moved. It keeps hitting that all-time high of around 190. Remember, stock did split a while ago. Remember the days when Amazon was $1,800 a share and so on. But Amazon hasn't moved. However, the revenue of the company, the profits of the company, everything about the company, if you want to talk fundamentals, has been skyrocketing. So you have what happens when that occurs? You get a constantly dropping PE ratio. You get a very attractive stock in terms of a price point. And then you look at the technicals here, and you see the technicals in Amazon. Not only is it hitting right on an all-time high, but that 50 SMA is holding. It's holding very nicely. In fact, it's been holding ever since the beginning of June or June 6th, and it dipped below it, popped back up again. And it seems to be very strong support, and that support lies at 182.93. So Amazon may be my short-term and long-term pick, but again, I have to caveat, we do have a volatility event occurring tomorrow that could be very unpredictable. So, and now we see the market starting to drop here, as we said at the beginning of this broadcast, that the market would drop.
So 182.50 is support. And let's say that we get through the event tomorrow. Are you looking for July normal expiration, which would be 4 weeks, to sell the 180, 175 bullish put spread? Something like that. You can actually get quite a bit for that.
That would be perfect, actually. Yeah. I mean, if you went to, let's say, July 19th here, a month out. Actually, you can probably go to July 12th. And you looked at the 180, 175, you're going to get $1.12 on that. Yeah. So I'd be looking at that bullish put spread as a pretty solid case there. I might even be looking at getting some calls at the $180 level for next week at $6.15 each. So I'd be looking and playing both short term and a little bit on a bullish put spread term for that. So yeah.
Here's another nice one. All you have to do is go out to July 5th. and you could sell the 180, 177.50. That is 50 cents bid right now, offered at 61.
That's
So
not bad.
that's also nice. And that's only, I mean, you've got a holiday in there as well. So tick, 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 time decay. That's a pretty nice spread as well. So
180, 177.50. I like that even more. July 5th coming up much sooner. In fact, I like it so much, I'm going to take it right here, even though I think even with the witching event tomorrow, I want to grab this at this price. I think if it drops, it's going to bounce going into July. I'm taking that. Got it for 53 cents, took 20 contracts. Bullish put spread on Amazon, 180, 177.50 for 53 cents. I did 20 contracts and it expires 7/5.
question for you. How did you enter that spread? Did you just try and get a 153 credit, or how'd you get the price?
I put it in at 50 cents and it came out at 53.
Oh, nice. Price improvement. That was through
I know,
Schwab, right?
So here we have that, and there we go. Got a couple of questions. Curious about the DM position. Can you share the reasoning? Well, it certainly doesn't look good right now, does it? No, it looks like shit. But the point on that is that right now it had unusual option activity. And so, you know, when you see unusual option activity on a stock like that and you get really cheap options, you can get them almost at parity. And I looked at the chart on it and the sort of bullish explosion that it had on, well, what was it, yesterday, Tuesday. I took those out to July. That's when it was. It wasn't, you know, when I see it that far out, it usually, you know, and the size of that unusual option activity usually indicates some institutional play on that stock that I'm not privy to why. So I know it's having a pullback today, but I have it till July and I'm just going to hold those.
And you can see the long red candle on the SPY 5-minute chart. So yes, we are well below the low of the day, and we're coming in pretty strong here. I'm just going to set an alert in case things start to heat up. I'm going to put one at the low of the day from Monday or Tuesday, and we'll see if that gets challenged. And so yeah, easy come, easy go. Now this type of program trading right in here, as we get into triple witching, you're usually going to have 1 day a week that's very volatile. And typically, if you start getting a lot of momentum built up one direction, the institutions will feed on that and they will actually leg out of their positions and they'll kind of goose the market higher on that day. I'm not privy to all the different positions that they have on currently, but I know back in the 1990s, what they used to do using the OEX, and this pattern has been present most of the time, the week of expiration. You don't know which day it's going to happen, and there are times when you don't get that type of momentum, and those programs never kick in. So I don't have my pick yet, so I'm going to surf around and figure out what I want to do. I'm reluctant to. I don't want to have a bullish pick in here. That's my concern. Is I think the market's going to pull back in here, and you can even see today we're getting kind of that red candle on a D1 chart that's going to look like a bearish engulfing candle.
Got a quick question on HIMS, and HIMS, no doubt the chart looks good. You're getting a pullback today. This most likely is a reversion to the 15 EMA, 8 EMA on the daily chart. Look for it to come down and test around 22 or 22.25 and bounce off of that. You want to use that as your guide. If it breaks through, obviously you don't want to take it. But if it does seem like it's going to bounce off that EMA, that would be a good time for a long, as it might retest the all-time high. But I'd wait for that test of the mean. And here comes that market drop. Look at it. Look at that. I mean, If you tuned in at the beginning of this stream, we called this market drop. We basically said, first thing we said, market's going to drop here. And that's exactly what it did. So we're getting a drop. We're seeing some weakness throughout the semiconductors. Actually, it looks like NVIDIA is dropping, AMD is dropping, Adobe dropping, SMCI is dropping. Yeah, we're definitely seeing a pullback here, and the pullback is starting to get some legs and decent volume.
You just brought up a really good point that I wanted to mention, and that is that the rally that we've seen over the course of the last month or so has been very narrowly defined. It has been a lot of the tech giants rallying, and it's been AI that's been fueling this move higher. And in fact, so far year to date, I believe 5 or 6 stocks have accounted for 60% of the gains in the S&P 500. So you've got, out of 500 stocks, you have 5 stocks. 1% of the entire index is pushing it higher. That's not healthy. You really want to see broad-based participation.
Yeah, and look, we've seen this before, right? I mean, obviously, we always preach you don't anticipate, you confirm, right? But past is prelude with the market many times, and we've seen this where you get a very top-heavy market, very few stocks driving most of the gains. On top of that, all you have to do is look at the equal balanced index, and you'll see that that's actually dropping. It's the weighted index, that's what we know of as SPY, that's going up. You see a very low VIX, right? You see VIX almost at a bottom here. You see the market, at an all-time high with very low volume. All of these things should be warning signs. They should be little red lights flickering here. If you're in your bullish positions, riding this nice wave, take the profits. And you can see that's what is happening. You have people here that everyone's taking profits. And remember I said, it'll be interesting to see. You can get an idea of what institutions think about tomorrow by the price action today. And you can look at what SPY is doing here. You see this drop, that is profit taking.
Yep. So, all of this move to a large degree has been program related trading. And you can tell that, as soon as I'm just going to go back to the bounce back in here from November, you can see how tight and orderly this price action was. And look at how heavy this volume was all through here. Well, this is large institutions. These are your long-term players who are in there, buy, 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 buy. And once this starts to wane, because these guys don't like to chase all-time highs, once those guys have got their allocations on, then what you start to see is kind of patchy, light volume trading. And this is where the programs take over. They don't get very active in here because the intention of the programs is always to test the bid. What's there? Is it still there? How strong is it? Okay, everything looks good there. And then they reverse those programs. You might think, why would they be selling when the market's going up? They're testing that bid, okay? And they're making sure it's like walking out on thin ice. You've got a spud that you use to check the ice ahead of you, and you're testing. Okay, it's safe. But once they're confident that it's safe and the bid is still there, then those programs will reverse what they sold, might lose a little money on that, but then they will buy, because they are confident that there's support and the market's going to go higher. So when you see a lot of these wiggles and jiggles intraday, know that on light volume, this is your programs are running now. Okay, you're going to get a more normal type of price action each day versus this really steady, just buy every dip, buy every dip, buy every dip, just buy every dip. Now it's like, you're going to get some declines that actually start to gain traction.
And I'm watching this market now, down almost 0.5% at 546. You're getting people.
All right, I'm going to find a short, and I'm just going to be flipping through charts. So if you're watching, and I guess we can take a couple of questions here too.
I'm looking here on some shorts today. one of the problems when you short in a market like this is, you obviously, you always look at the D1, right? You're looking at the D1, you want to see what the trend is. But a lot of the stocks that are pulling back right now have amazing D1s, right? So you're looking at the NVIDIAs, and you're looking at, Avco and all of that. And they're down big. Avco's down big today. You have a lot of these stocks. Look at Crowd. Crowd is down quite a bit today. But then you look at the D1 and it, has to give you pause, because when you see a D1 that strong, is it a bid test? Is it a temporary pullback and it's just going to resume where it's going? Or is this a real pullback? And that you really got to try to find the kind of sweet spot Goldilocks stock here that is dropping and really didn't participate in the market rise earlier.
Yes, and let's, Wiki 2.0 kind of stuff. When you're a professional trader, you can look at charts, you can do things that other people can't do, because when the table is set up perfectly for you to take a trade. And I just took a look at MU. I would have no problem shorting MU, even though it goes against the grain of everything that we teach in the system. This is the type of stock that you would want to buy here at the. This is a gigantic bearish engulfing candle. That is what a buying climax looks like.
Yes.
And so is this something that you're going to see us do in these videos? No, because you have to know when to exit the trade and pull the plug on it. But yes, this is a full head of steam right here. You can see from the opening today, this stock got rejected. And without even looking at the SPY chart, I know what the SPY did. It had a red candle to start the day, but then it climbed higher, and it tried to get to the overnight high. What did MU do? Whap, whap, whap. It never got that bounce, and it was just consistently making new lows. And now it's starting to roll over. Look at these red candles in here. I think Micron's going to be my short. I wouldn't be in it for probably more than a week or so, but I could definitely swing that. This is what a bearish reversal can start to look like. You got the bearish engulfing candle. You're going to get some follow through on it. And if you get this upward sloping trend line here that you can draw visually, that comes into play probably around 140, that would be your first line of support. But the stock's at 145, so you've got plenty of room for this stock to continue to drop.
I pointed out that MU has earnings next week, by the way. A late earnings.
Yes, 626. Yes, so you would definitely want to be out before then. Yep. So
thank you very much, Shalani.
Yep, with that in mind, so maybe we'll keep on looking. That was just something that that's a pattern I would be looking for. And if I saw this on the market right here, that would tell me, okay, there are sellers out there, and we've probably seen at very least a short-term top.
MU at a very late earnings date.
That is one choppy stock too.
Yeah, it is. I still, last week I picked also, I said, you would do well to stay into PLTR. And that stock obviously did great if anyone also stayed in that trade as well. PLTR backing off like most stocks right now as the market is dropping. So, I wouldn't be going long right now in pretty much anything, but just, say PLTR was certainly another good pick. Someone pointed out CELH at recent lows, ready for a bull run. I would never say that. No. It's in the bottom right-hand quadrant. This thing has dropped from May 28th through 3 SMAs. It might look like it has bottomed out here on this doji candle on 617. However, you are staring right at the 200 SMA at 65.75. And even if it breaks that, you're going to get confirmation of that break. And the moment you have confirmation of that break, then you're going to start staring at the 150 SMAs. So I would not touch this thing unless it started going above, 77, 78, and then you missed $17 of the run. So, and, I basically would not touch this thing. No.
I am just keeping on looking in here and trying to find that good short.
That, by the way, you're not alone in B. Who wrote that is named B. You're not alone in your thinking, the mentality of that, and it's a thinking that plagues a lot of retail traders. And it is a investment mentality that might not be the best trading mentality. And there's a clear difference there, which is you look at these stocks that are beaten up, right? They gotten their ass kicked for whatever reason, and with fundamental, whether it's news break and all that. But you look at their chart and you go, okay, this stock is at 80 and it used to be at 220. Okay, well, it's got all this room to grow, right? An example of that would be you look at something like BABA. Obviously, BABA used to be at 300. Now it's at 74. However, if you took that mentality at any time, let's say it was at 350 here, and then you go, all right, it's gotten its ass kicked. It's now June in 2023. It's at 90. Now it's a good time to go long. Nope. No, it was not. It kept going down. Then you look again in August. Oh, now it's a good time to go long. It's popped up to 90 and it looks like it's going to start, it's got 150 to go. Nope. It went from there down to 65. So these stocks, you might think they've gotten their ass kicked. They got all this upside potential here. I'm going to grab it before it swings up. And that is just another way of saying I'm timing the market. And when you try to time the market, it doesn't work. If you have a fundamental basis for going into a stock like BABA or whatever, and you're saying, you know what, I'm going to hold this thing for 5 years. Great. Rules are different. Different mentality, different rules. That's based on your fundamental reading of the company. And you're saying, I think this is way undervalued. I think it dropped for XYZ reasons. And therefore, I'm going to buy it, and I'm planning on holding it for a while. So I'm not even going to look at the daily fluctuations. But if you're looking at this as a 1 day, 2 day, 2 week, 1 week trade, then no, you don't want to try to time the market because you have a very short window of being right.
I like RH as a short. And you can see there was the earnings announcement right there. And the stock dropped dramatically. And now you can see it's broken through this low plus trend line as well. It's got follow through. Today, the stock was down when the market was up. Look at this nice steady price action. I like RH as a short. That could be my pick of the day.
That's a good one.
It's not the most
terrible
liquid
earnings,
stock.
Crazy owner, great price action on the downside. A whole big article came out about this stock in Barron's or something that concurred that this thing is just a money pit. So investors seem to have taken that at heart, didn't like the earnings, and now you're far enough away from the earnings to confirm that, yes, this thing is bearish.
And so I'll show you the search that I used to find it. And I'm just looking at ASAN, also a very nice short. So I'm just going to show you how I found this. I used our new 10P signals, and you can see from M5 to H1, I have those marked bearish. I have D1 marked bearish. Option liquidity better than -3. Our vol better than 1.5 times its normal. So it's got some decent volume today. And these are the stocks that came up on that search. Not 2 dozen, not 50. There are only about 10 stocks that I had to click through, and almost all of them look really good. Baidu looks like a great short. I did highlight Alibaba, BABA, last week, and that's the only reason I wouldn't pick it right now, because I don't want to load up on too many Chinese stocks on my shorts. But you can see this is a nice low minus breach right in here. Stock's got a lot of relative weakness. It's below all the major moving averages. A very nice trend. It's just a little far away from that EMA 8. So let me check that on RH as well. And yes, the EMA 8 is so far away from RH that I can't in good conscience use that as my pick. I like it to continue to go down, but you really need to have that move just starting out. And so the stock needs to spend some time here so the EMA 8 can catch, or it needs to bounce just a little bit, and that will provide a better entry point.
Eric asked what I think about Home Depot. Closed above the MA 100 and 350 Sport Cross. It didn't close above the MA 100. The MA is still right above it here. You can take a look and see that the MA is at 353.70 and it's at 351.08. In fact, it was unable to hold above that. It is down today. It is in kind of no man's land. If anything, it's a short. Probably wouldn't touch it either way. But if anything, if you're going to do anything with that stuff, it's a short. And so in essence, just a dead cat bounce right here. It's a 3-bar bounce. So it's a dead mouse bounce, maybe. I don't think that this is going to head up. I'd be surprised if we even head back up and test view up here.
Yeah, so what you want to see here is this move that started, that took out the previous low of the day. You want to see half of this preserved. So you don't want to get too much above 547.50. But again, this is all triple witching, volatility related, position squaring. So you can see that you've got some nice green candles in here and then long red candles. This is a very choppy market. So when you get a big drop like this, you don't expect without any kind of news that we're going to continue to stack 4 or 5 more of these and just the bottom's going to fall out. No, you've taken out the low of the day. You're going to bounce. This is going to run its course. And then eventually the next wave of selling is going to set up. And then you get a nice entry point for your next short. Market moves down. Hopefully that coincides with a bearish 10P cross, which we did have right up here.
Just watching this price action here. You can also look at the volume bars on the 5-minute. Look at the volume bars on those 3 red bars that took the market down. Look at the volume bars on this bounce, much lower, right? So you get high volume selling, low volume buying, and you can kind of see what's happening, right? The sellers are still going to be in control here. If this were a real bounce, you'd see those 5-minute volume bars exceeding the selling bars. And that's not what's happening. That's just a little thing that I like to look at whenever I see something like this here. Is there volume that's supporting this bounce that exceeds the volume that supported the drop? And if there isn't, then I tend to have a lot less faith in the bounce. I do like this RH short, but I agree on the EMA there. So
I would day trade it for sure.
Yeah, I day
swing
trade
trading. Yeah.
I probably, I could probably short the shares there. I am in all cash in my larger account at the moment. I still have the challenge account, which is going very well, by the way, and those are predominantly shorts, although I did add that bullish put spread on Amazon here today, and I have the DM long. But on my larger account, I'm keeping it all cash, simply because I do believe that there is going to be a drop. And so if I'm going to go and say, oh, you know what, I like SMCI again, I did well on it last time, I want to go back in, it's strong, I'm going to wait. I'm going to wait and see, is this thing going to come back to 900? If we get a drop tomorrow, $4 or $5 in SPY, you're going to see a lot of these recent huge run-ups. They're the ones who are going to be leading that drop. So, if you're bullish on them, you're most likely going to get into a better price. If it doesn't drop tomorrow, well, then you're still bullish on it because it's not going up, and you can still get in and ride it. So either way, it's definitely in your interest to wait when you're in this type of situation. And I know it's always hard to sit, because when you're trading and you're a trader and you're sitting there and you're like, all right, I want to trade. That's what I want to do. If you get a ball and a glove and a bat and you go out to a field, you want to play. You don't want to sit there and wait for a rain delay. But that's, think of it like a rain delay, because that's what this is. Just sit back, wait, let the price come in, unless you're going to start looking right now and taking some day trading short-term shorts, because that's what I would recommend right now, which are short-term shorts on this market today.
Yeah, in that spirit, I think I'm going to go with MU as my short. I mean, I would have no problem being short that stock for the next few days for sure.
Kind of like that short a lot. MU. It is not even doing anything with this bounce right now, MU. If you look at the price action, it's getting no traction on it. I kind of like MU short as well here. And let me see what would I take on an MU short. Wow, yeah, because the only problem with this for me is that IV is incredible, obviously, because you have earnings coming up.
Yeah, you almost have to short the stock. So
you almost have to short the stock. Exactly. You're getting pummeled on the IV on these options here.
Yeah, and I think that waiting for this bounce to run its course here, I'll short 1,000 shares of it. So
there you go. It's not a bad short.
No, I think that this stock is, I mean, it's weak.
It is. It's a good short.
All right, I'm short at 145.05.
You're going to do
on
well
1,000 shares. So yeah, I think I mean, I would short the heck out of this thing given what I've seen from it so far. I'm not worried about it at all. That is a gap up reversal leading to a bearish engulfing candle, and it is a large one, and we've seen nothing today that tells us that it's going to reverse. So anybody that's long Micron, they are going to be seeing that chart as well. And if they were thinking a week ago, yeah, I probably should lock in some profits, today they're like, that's it, I'm taking some gains on this sucker.
Yep. Someone just asked me about my Adobe spread. Obviously, I'm still long the puts on that. They expire tomorrow, so not much time there. Only thing I could say about that is Adobe can move. And if this market drops substantially, particularly with tomorrow's triple witching, Adobe is going to go through the floor. I wouldn't recommend shorting it right now, obviously, if you're not already short. But I'm holding on to the puts. And, if it drops, great. I'll come out well ahead on the trade. So I'm just watching the price action. Same thing with AMD. I have a short AMD, and obviously today popped, but it seems to be pulling back now. I'm short McDonald's. I'm actually more worried about the McDonald's put debit spread. McDonald's was a solid short, and today it seems to be going. It seems to have some relative strength in the market. So watching McDonald's closely, I might close down that spread for a loss and keep AMD and Adobe shorts on. But we will see how tomorrow goes. I don't want to do anything before tomorrow on those because, like I said, tomorrow you could have a very volatile day, and it wouldn't surprise me to see Adobe down $20 tomorrow. It could easily happen. So
here's what I was mentioning on the 10P signal. So I'm on a 15-minute chart here. I would be buy only on a 5-minute basis because this 15-minute signal is going to prevail over the 5-minute signal. So all I'm going to be looking for on the 5-minute basis is buy when I have a green buy and exit when I have a yellow. So you're long in here, but you're out in here. You'd be long here, out here, and you don't have any technical confirmation. So you've got to avoid when you got a stock that's in a compression. But similarly, on a 15-minute basis, you've got a sell signal here. So now I'm only looking sell side, and today you would pick up that sell signal right in here. That would be your entry point right there. So now both the 5-minute and the 15-minute agree. So that's how I use the trade signals. I'm looking for confirmation across multiple time frames.
You know what I'm going to do for MU? I'll do a put debit spread on this. And I'm looking to do the 144, 143, maybe for 40 cents, if I can get that. And do maybe, let's see if I can get that for 40 cents here. I just put it in. I'll wait to see if it clicks. Someone asked thoughts of the TPR chart. Went short yesterday morning, looking at the weakness early in bearish daily, like the breach of the 100, 200 SMAs. Not sure should I hold this, so looking to exit. If it closes above that 50 SMA, I'd look to exit. So you're looking for a close below 41.39. If it doesn't close below 41.39, particularly with the bearish nature of today's market, then yeah, I would probably shut down that short. So give it to the end of the day, see where it looks like it's going to close. You don't want to get too far from that SMA. Oh, just went through. Okay, so I did just short MU here. I did short MU. I did a PDS. I put my price in. I sat there and I waited for it to click. 144, 143. Put debit spread for 40 cents. I did 30 contracts. So I'm risking 1,200, and I am looking to gain 1,800 if it falls below 143 by tomorrow. Thank you, Pete, for the call out.
I had a couple.
A nice show there, as we like to say.
Well, it's, like I say, Wiki 2.0 kind of stuff. It's not something that we teach, but I do teach to watch for these bearish engulfing candles and bearish hammers off of relative highs for any stock. So those are always warning signs.
Yep.
And there's the market starting. Now it's kind of topped out. So, market analysis, you got this big drop. You've got selling all day long. You took out the prior day's low. Okay, we've got some volatility. So we're expecting a bounce. Try to get the market to rally up here, and then whap, we get this bearish bearish hammer right in here. Okay, that's a sign of resistance, the first sign of resistance. Now we'll see if we can't move any higher above that 548 level, let's say, and we start seeing more wicks and more wicks, then you know that the next leg lower is close.
But you got to remember, a lot of people asking some of these type of questions, and which are, when you're starting trading, we give you some very basic rules, right? Things like, if the market is down, don't go long on a stock. If the market is up, don't short a stock, right? And obviously, as you get more experience, there are plenty of exceptions. You want stocks in the lower right-hand corner on the daily chart, things like that. Very straightforward checkbox rules. Does that mean you'll miss probably 20, 30% of the good trades? Yeah, but the idea being, because you don't have experience, the trades that don't fit that criteria may be harder to manage, right? There may be times where you have to get out quickly, or maybe even add to it or whatever, and they're not cookie cutter trades. So those are the general rules when you get started. As you build, as you say, okay, based on just those rules, because if you can't be profitable based just on those rules alone, those flat rules, and you don't have the mindset to be profitable in that, you're not going to be by expanding it. So the idea being, all right, follow those rules, get to the point where you are consistently profitable, and then you begin to expand. Then you begin to move on to more, creative trades, which are sort of there, like an MU trade being in the upper right-hand quadrant, or going long if the market is down on a very relatively strong stock, etc. That is sort of what you'd be looking for. So yeah, that's sort of the idea. So people are generally like, wait a minute, that breaks the rule. Well, it breaks the rule if you've been trading for 2 months. It breaks the rules if you haven't been a profitable trader. It doesn't break the rule if you now have hit those milestones and you move up. So think about it going up levels.
Yes, and it also, it may break the rules, but the problem is that when I show you a bearish engulfing candle that's this long, okay, all of a sudden, traders who are not seasoned, they start seeing this pattern everywhere, and they start looking in here and they go, look at this, the May 23rd candle. That's a bearish engulfing candle. Pete told me that's a bearish engulfing candle. I need to short that. No, it's not. It's not even close. And it hasn't even made a new relative high. This is a gap reversal. And it's the price action that happens in here during the day, and what the market was doing on that particular day that's also important. But you can see here that, no, that wasn't a good short. The stock continued to move higher and higher. So you have to know the exact pattern, and you do not compromise. And that's part of reading price action. Is this candle today is not like what we saw on May 23rd. Okay, not even close. This is a little bit closer, and then you get another red candle in here. All right, That's showing you that there's some clear signs of resistance in here, but it's still not this candle. And so you bounce around a little bit. Now you start seeing this rollover below AVWAP-E. You get a sell signal here. All right, I'm going to see some weakness in the stock. That would be where you start shorting in here. But that's not the same as this. And that's the danger of showing you an exception to the rule, is that all of a sudden you start seeing it everywhere. And now it's okay to short at a new all-time high.
Jack says, don't tell that to the guy on X lighting up your comment section. Haha. Yeah, I mean, I know who you're talking about. The one particular troll. This person used to be a moderator in the Real Day Trading community until I found out that he was trying to open up his own separate thing and sell people courses of a system that just did not work. And then when he was called out on it, a vitriol spew of anti-Semitism came out, so we banned him. And just to show you how intelligent these trolls are, this is the same person who spoofs my Twitter account, right, my X account, and uses that going under the Real Day Trading name to try to convince people to send him money. They will DM people using my name to say, hey, this is Harry, and I'm offering a special course just for you, while at the same time bashing me on Twitter. So he's kind of working against his own interest there by trying to use my name to falsely, fraudulently take people's money based off my reputation, and at the same time trying to damage the reputation. So brilliant plan there. Unfortunately, the new X rules instituted doesn't really allow you to truly block. It used to be if you block someone, you block them. You don't see their comments, and they can't comment on your stuff either. They're blocked, they're out. But now all that happens is that someone who's blocked, they can comment all they want. I just don't see their comments, which for me is nice because I don't have to deal with it. But everyone else can still see it. So
yeah, I've had the same thing happen, and it was in the chat room, and I had I allowed people to private message, direct message, and they were soliciting people. He was definitely, and then I looked further and found out that he has SEC violations against him for fraud. So that's why I don't allow people to DM in the chat room. Plus, it's a community. We all thrive together, okay? We don't need you, Dave, and I having our own private chats all day long. What good is that to everyone else? We want to be an open community where we're sharing ideas and we're growing together.
Indeed. Although I do admit to every now and then DMing Dave going, this guy's a fucking moron. But, it's just...
Hey, you can say it to my face. It's okay.
Not you. I'm talking... that would be funny. No, but, in any chat room, you're going to get people. I mean, this is a high, Pete knows more than anyone. This is a high turnover business, right? Because no matter how much you teach people, no matter how much you push and say this is how you do things, people are going to lose, whether because of mindset, because they didn't put the study, the time in, whatever. And so you get people who drop out, you get new people in, which means every month you're getting this new batch of people who don't know the rules, people who don't know the system, people who don't know the rules of the chat room. And so they all come in, and you have to explain the same, almost cut and paste the exact same things over and over and over again. And every now and then it gets tedious, right? Every now and then you see someone say the exact same thing about, the way they like to trade that someone a month ago said, and a previous month ago said, and all of them, have lost money throughout the years. Nobody's ever said what they're saying has ever made money. And you just want to grab them and be like, it's not going to work, you idiot. But you just have to go through it each time, and every single time, the same thing.
I did have a really good question here that I was able to scratch my MU, actually made money on MU. I bought the damn stock instead of sold it. So thank you very much to Professor Python. So yes, now I'm going to be shorting it because that's the side that I want to be on. And unfortunately, that took me a few extra seconds. So now I'm not sure what happened in here, but yes, that was a very nice catch. Thank you. Yes, I am short Micron, but I am short at 145.05.
How do I decide what position should go in the challenge versus your main account? Well, main account, look, when I can use shares, I'm going to use shares, right? On an option, you do get leverage, but you have a ticking clock against you. So obviously, I'm not going to short 15,000 shares of SMCI in a challenge account, or go long that. And obviously, I can take more risks in it because I can hold longer. If I am long SMCI and it dips and I'm underwater, but I have a reasonable amount of confidence that that dip might, might be the penalty box for 2 to 3 weeks and then come back up, I'm able to hold that position. So I'm able to take larger drawdowns and hold them in the larger account than I would in a challenge account. So that's sort of the main difference. So your pick is going to be MU. Mine is Amazon bullish put spread. Big event tomorrow. We will see how that goes. And I do think we continue to drop throughout the day.
Yes, I'm in agreement. I just feel that we got triple witching, so it's going to be volatile, but this move feels very fabricated. The move up Monday was out of kind of nowhere, and it just really, this move here just kind of took off and it fed on itself. And you got tiny little pullbacks and then the next leg higher, and it was a big spurt. So these are institutions rolling out of positions. It's a fabricated move. And now we're starting to see those gains be given back. Yes, I think that this is going to result in a red candle at the end of the day. And we'll see how long it is. But I think that could set us up with a temporary top here. So we're looking for a pullback. We're largely in cash. We have a buy the dip mentality for a swing basis, but on a day trading basis, we're certainly not opposed to trading the short side.
And just a quick clarification here, all OFAT. Yeah, JPM has accounts where they have your money there and they trade it for you. That is not this account. My account is 100% client controlled. So JPM is not allowed to make a single trade in the account unless directed by me. So they do not trade the account freely. I tell them exactly what to trade in the account. So it is not them, basically trading themselves, in which case, yeah, I'd be able to see what they're doing. But there isn't a single trade JPM has made. So they're just acting purely as a broker here, a smart broker that I can connect to directly and get a lot of information from and reports on and all that. I tend to try to share those reports with people. But that account is 100% controlled by me. But they also do not tell me what, and they're not allowed to tell me what other accounts are trading. So they will occasionally say, hey, a very big, SMCI trade just came across our desk. They won't say where or when. They could say, someone just bought 10,000 things that I could find out if I was looking at a time in sales or, looking at a Momo report on options. They'll just point it out to me like, hey, a big trade just happened here. I can ask them desk flows and they'll give me their kind of morning update on chips. Like they said, looks like a lot of profit taking in the semi-conductor space, but not a lot of shorting going on. So they can give me that information, but they can't give me any direct information or, tell me, this is the number of, I can't be like, hey, how many long trades for SMCI today? They can't tell me that.
I did have a question. Do prop firms really hire trading psychologists for floor traders to help them improve their trading? I'm sure they do. I haven't been privy to any, but yeah, I'm sure they'll do anything that they can to help traders. And that's, the mental aspect of trading it's huge. You got performance coaches, and maybe that's what they call them more than anything, is a performance coach, and they're just trying to help them hone their skills and ask them questions if they're on a losing streak. What's motivating them? What's changed?
Here's my version of a prop firm trading psychologist. Hey, Bill, look, you're fucking up, and you see everyone else here? They're not. You are. So either you're a fuck up or you're going through something. Either way, we don't care because you have our money and we're giving you a tiny sliver of that, but you still have our money. So do us a favor, stop fucking up, or we'll give your desk to someone else. Okay, session over. Looks like our time is done here today.
Yes, and it's, you know, not to be confused with the prop firms of today, where you've got Apex and the rest. They truly don't care. They are not going to help you at all. They are making their money. I think that, you know, you have to pay monthly fees for access to their capital, like $85 a month or $50 a month, whatever it is. And that's I'm not even considering those to be prop trading firm. I'm talking about, you know, it was floor trading specifically that I was asked about. And yeah, there's a whole indoctrination, and you're bringing somebody on board, and you're really, there's a vested interest in having that floor trader be successful, because there were exchange memberships and licenses. There was an investment there. So yeah, they want to try and help those guys succeed. But psychological part of trading, very important. And but it becomes less important as you become more successful, because you've already kind of learned your way around, and you've dealt with a lot of different market conditions.
Yeah. All right. That's all I have for this today.
All right, everyone, I'm going to be kind of taking more time off this summer. I'm going to miss my live event next Wednesday, although Harry certainly could do one solo or with someone else if he wants to. And then I think the week after, he might have a schedule.
Yeah, I'll be going to visit family O'Joy in New York.
Okay, well, in that week, I'll do one for sure. I'll fly solo if I have to, but I might recruit one of our proven traders, or maybe I'll have Rajul on again. I think that was kind of
that was great.
It was very refreshing. All right, everyone, good luck with your trading. Keep it a little bit light. We've got triple witching coming up. We have no news next week. GDP, durable goods, big nothing burger. We got the 4th of July coming up that's kind of thrown in there. So look for a little soft patch in trading here, and we will see you soon. Thank you, Harry.
Thanks.
Bye now.